everybody listening. Welcome to this session. This is the Latchel Property Management Podcast, and it's yours truly here, Ethan Lieber, the CEO of Latchel, and I brought in two fantastic guests today from SES Risk Solutions. We have Scott Phillips, who's the SVP of Digital Integrations, and Brett Bennett, Strategic Partnerships Leader. They've come on to talk about the emergence of integrated landlord insurance solutions in the SFR space. And we're going to talk about how property managers can leverage insurtech solutions like SES to offer better landlord insurance products to their clients to increase retention and create additional revenue per unit. So large institutional owners, they've always had an advantage, but SES is leveling the playing field and actually helping property managers beef their margins while doing it. Super excited to talk to you guys. Welcome to the show, Scott and Brett.
Thank you, Ethan. Appreciate it.
Happy to be here. Thanks for having us.
So we've had plenty of conversations together. We're doing amazing things together. But before we dive in, let's give listeners just a little more insight into what SES is. Can you tell us what you guys do and why you do what you do?
Yeah. Scott, you want to go first?
Yeah, absolutely. STS, I guess at the 30,000 foot level, is a technology-based insurance company focusing on insuring real estate investor properties for over 30 years. So we operate in a more technical form as a managing general underwriting agency. So what that means is that we are the intermediary between the carrier and oftentimes your retail broker, and act as the subject matter expert in that realm and focus specifically on real estate investor portfolios and real estate investment property coverage in general. So that's kind of the high level of who we are, what we do, and what we're focused on. We're very, very niched and laser focused on the investment community.
Yeah, and then to furthermore on that, we really started to dive ourselves into the property technology industry over the last few years. You know, it's a young industry. It's around 10 years old. That's really been growing rapidly. There's been a lot of investment into it, and insurance companies have always naturally been late adopters into new technologies. And being on the forefront of insuring these properties, we started to see a lot of these companies pop up and the value that they bring to the marketplace, and starting to look at the data analytics and the machine learning that can come out of being able to track more historical data on properties with the emergence of property technology. And that's become an inherent advantage into the insurance side and moving more into the insurtech space.
Interesting. So there's a couple things I want to tease out there because I think some folks may have missed this. I heard that you don't actually displace any broker relationship that the management might have, which might kind of initially seem confusing. Can you expand on that just a little bit? Because I know from our conversations, like you're truly broker agnostic, and you can work with anyone, and you can work with you're very plug and play working with the existing relationships a management company has. How does that work? Can you explain that a little bit?
Yeah.
Go ahead, Brett.
Go ahead. I was going to say, we are being a managing general underwriter. 99% of our distribution is through broker relationships. So our role is to work with strategic carrier partners to put together an insurance product offering that's designed for this specific niche market. And then we work with our broker relationships to be able to deploy that product to insure landlords and property management companies. That being said, we are broker agnostic, so we have we work with any broker that wants to come to us, that wants to get a quote. If the property manager hears about our program through some prop tech solution and they have an existing broker relationship, yeah, absolutely, we work with them every day.
That's awesome.
And just to dovetail off that, it really, when you look at the way the structure is for us, we are subject matter experts in this space from the carrier's lens. And so we are not going to pretend to be the subject matter expert at the insured level and know every nuance of every property manager. Everyone's got a little bit of a different mix as a business and has a different way that they manage their properties and like to interact and all of those little elements. We definitely have a great lens to that and can bring a lot to the table, but we always want to respect that boundary. So with a property manager, relationships are everything. And that is including the relationship with their insurance broker. And it's something that we can easily support and accommodate, so it doesn't disrupt, the value chain that's being exercised there.
And this probably helps us segue to the next question I had for you, which is, to me, this sort of the way I kind of interpret this as like the CEO of a software solution is you're really providing kind of this digital insurance solution that then you'll team up with the manager and their broker to actually offer out to a clientele. But maybe that's a little bit off base. That's kind of what I initially think of, though, when I think of you as this integrated landlord insurance solution. So maybe you can, if I'm wrong there, maybe you can clarify and add some more detail. And at the same time, would love to hear about, as these integrated landlord solutions have emerged as a result of, all this prop tech being born in the SFR space, like how is that? Why are those being kind of emerging together, and why are those growing in the management space together?
Excellent question, Ethan, and I'll take first swing at it, and I'm sure Brett can probably round out the answer there. I think there is, when we talk about integration, I want to kind of take a quick step back into the first half of that question. And when you look at integrations, there's a number of different ways you can approach it. And what I think we want to focus on is how to add value when we integrate, not just to be the convenient partner and make it easy. Yes, that is, I think, why a lot of the driving growth is, hey, centralized services, make things efficient, optimize processes, and automate processes where you can. And then where does this insurance piece fit in is to, again, optimize and make it efficient, but to add value to both the end user, which would be the insured or the landlord, as well as the property manager, and be able to bring additional scalability for them, as well as diversify and improve sort of their offerings and landlord benefits. And Brett, I know you've got a lot to think about this and have really driven a lot of these thoughts. What else would you round out on that piece of it?
I think that really the emergence of the prop tech industry has brought this natural benefit to landlords in the eyes of an insurance carrier. When you are investing in property technology to protect your home, or a technology like Latchel, when you know that there's an emergency that needs to be handled right away, there's an inherent value that comes to that. And as an underwriter, we can see that, and we can take that and make a case for it and say that a landlord who's investing in these services has a good understanding of how they want to protect their property, and it's naturally creating less risk, which puts you in a better lens to the carrier. So really what it is it's almost a symbiotic relationship of providing value to where not only property technology is providing more value to residents through resident portals and being able to communicate with your property manager easier, but now there's also an inherent side of providing value to the landlord. And I think that it's a whole nother side to the coin of where we're looking at where all this property technology has emerged of maintenance solutions. Let's make sure the resident is happy. Let's make sure that we can keep the tenants in and turn them over quickly. But now property managers have an opportunity to come back to their landlord and say, not only can we make your tenant happy, but now, hey, we can start to reduce your costs on the overall care of your property and provide additional value to you. And I think that's a huge win when you're looking at the emergence of a market, and now we're looking at the emergence of a second half of that market and more of an owner benefits offering that property managers can really start to dive into.
Yeah, so this is, I think, where things get really fascinating for property management companies. So you kind of mentioned this prop tech has kind of changed the landscape on how these companies deliver value to residents, to the landlord, to even maybe third-party vendors they're working with. There's been a rise in resident benefits, of which like Latchel has been a core part of, delivering extra services that can drive more revenue for managers. And one of the things that's most fascinating about you guys is you're coming in on the value to the landlord side. You're able to leverage these prop tech solutions to drive better deals for landlords. And this is creating interesting opportunity for property managers because they can partner up with SES, offer a very compelling, probably lower cost, probably higher value insurance solution to landlords, and actually do it in a way where they're creating revenue. Can you give us a high level there on how does that piece actually work?
Yeah, the one piece I think that it's been happening on your large gigantic institutional. They have the size and capability to leverage their own portfolio and be able to get access to rates and the data that Brett had touched on, right, and being able to now have a little bit of clout with a carrier almost directly in some instances if they're so large. But for the most part, the majority of this market space or this market are investors that own 1 to 2 properties. There is just not a way to scale them, individually to get any type of benefit. Now, a property manager comes in and goes, I got a lot on my plate. I don't want to have to go in and try to deal with this. But now the solution is you actually don't have to deal with this. You're simply now just a conduit to leverage your portfolio that you're managing on behalf of all of these individual investors. So now you're taking the ability, and now when you put in that other layer of Latchel, now we're taking Latchel and demonstrating that we have an additional sort of like leverage point to now really make the value go all the way and compress. I think in a way and flatten that playing field down, and that's what we're talking about because of the amount of clients that Latchel has. Then you go down to the property manager. Well, now we have that built out internally with the algorithms on pricing and rating. We're leveraging all of that from top to bottom to our carrier to say, this is a better clientele and this is a better risk profile, which is what the interest there is. So that is sort of the optics and what we're utilizing here and bringing to the table that has not been really done before, especially for your typical landlord that has 2 properties or your property manager who runs a book of, say, 300 properties. It's always been a headache and because it is insurance companies and carriers are manual for the longest time. And so technology just was not an option, even if they wanted to consider an alternative sort of solution that exists here. We have the systems in play, and now we have the capability to do it where it does not eat the property manager's bandwidth, and now is an attractive offering.
So to dovetail off of what Scott just said, so to give you like a real life scenario on this and play it through where we can just look at the value chain and the value waterfall from the property manager to the landlord and to the to us as a carrier to the prop tech company. So let's say you have a property manager that has 1,000 properties, 900 properties, and as Scott had mentioned before, the average investor has less as 1 to 2 properties. Well, I don't have a lot of buying power in the marketplace. I'm going to get the off-the-shelf book rates where they're going to punch it in and they say, here's your quote, have a nice day. Well, as the property manager, because I have an invested interest in protecting this property, we can create a master policy and leverage the buying power of their portfolio. So rather than going to the market with 2 properties, we're going to the market with their 900 properties and saying, hey, these are their 900 properties. These are their property management practices. These are the tenant screenings. This is their average tenant profile. They're not renting to, they're not a slumlord. They're renting to good people. They're using a key differentiator, and why we wanted to partner with Latchel is your emergency services response. We know the property is going to be protected if something happens, because that's what insurance is there for. It's not there for planned things. It's there for when things happen that are unplanned. Mm-hmm. And then we take that, as Scott had mentioned, we take that to the marketplace. And now me as an investor, I now have the ability to get the rating of what these large institutional companies are getting. And as a property manager, I'm now able to offer that to my landlord. And then as a property manager, there's a lot of other benefits that get to it. Tracking certificates is a nightmare. You have landlords with a couple of properties here. They have renewal dates on their insurances. You've got a guy that's got to go out for maintenance. You got to check and make sure that you're listed on their insurance policy in case the maintenance guy, something happens at their property. Now everybody's on one policy with one renewal date, and the property manager is listed as an insured on every single property that's on that policy. So we remove that headache as well. And then the property manager is able to drive revenue through the added value service of administrating the insurance.
Got it. So,
so that's kind of the value flow to that, and all the way down to the landlord. Does that make sense?
Yeah, this is beautiful. So basically, I've got 900, and maybe it doesn't even have to be 900. And I'm sure our customer, like anyone listening, is probably now thinking like, oh, well, Brett said 1,000. Does it work if I have 200 homes?
Oh, absolutely. Yeah, absolutely.
So I've got 200 homes I'm managing, or 1,000, or somewhere in between, or maybe more. I'm using Latchel. I'm thinking, okay, I want to provide an additional service to my owners. I want to give them better landlord insurance at better rates, leverage my buying power. When they come in, they say, hey, Brett, Scott, hook me up with SES. What they're after pictures that all of the administration for that insurance is now taken care of, which for most property managers is like less overhead they have to deal with now. Before Correct. You had to deal with the certifications, making sure everything was up to date. Okay, the after, that's not taken care of, because InsurTech and PropTech is a beautiful thing with beautiful automations that save you time so you can focus on high value activity. So you're taking care of all that stuff. You're providing better, more affordable rates to their clients because of your buying power, the buying power of management, plus they're mitigating some emergency risk using Latchel, and that all means something. So you're giving them better rates. They can then pass those better rates with the better insurance to the owners. And the thing that really made my ears perk up was, at the same time, you're creating an opportunity now for the manager to make more revenue per unit. Can you explain that part, and typically what you see in terms of how much revenue a property manager is able to create by doing this?
So there's a couple of ways that a property manager can approach this, and depending on, and that's what I think my earlier point is, everyone's got a little bit of a different mix, and we've got the same sort of mix of solutions. So if they want to, be more in control of the billing aspect of it, where the bill is being sent to the property manager is then pulling from the rent collected and kind of, managing the accounting, which is a very typical process for some, and it's very comfortable for them. It would be then the addition to an admin fee, because it's what they're charging for. And this is something that I think a lot of property managers probably have been very hesitant to even think about insurance, because they go, insurance, that sounds very legal. That sounds like I can get in trouble quickly because I don't know a lot of it. And there's a lot of really confusing terms and contracts and stuff. I don't want to touch it. But we've cleared all those pipes out completely. It is an administrative fee that they would be paid for billing and handling and managing that. Flip side is, hey, I don't want to touch it. I don't want to be involved in the accounting. fine. We have the ability for our system to individually bill the landlord direct for their properties down to the asset level. So Ethan, the landlord, has 5 properties with me. You get your invoice and billed for those 5 properties down to each individual property. It'll say how much it is per month. Obviously, the coverages will be a bit different. Brett, the other landlord's got 25 or 200, whatever it is. That is all. It is a rinse and repeat process, right? So in that sense, this becomes a marketing generating revenue, because what you're doing is essentially saying, I will go ahead and bring these offers and allow you access to offer this to my landlord. And they can opt in. And then what we have is a built-in, based on the size of who we're reaching out to, a marketing contract. It's not a per policy. It's not if they sell, if they don't sell. It's a marketing fee that is guaranteed to the access. We know the statistics behind it, and we know that we're going to be made whole and understand how that works. So on average, if you were to try to pencil it out, it works to be like a $3 to $5 per door. You know, if you want to handle the billing side, you can get down to a technical per door fee, or it is more of a little bit of a gray on a marketing, and where we can make whole in that sense.
Yeah, let's hone in on that first path, because I think this is the most interesting to our listeners, which is, without the management kind of sitting in to really run all components of the property and provide really like a full, robust service to the landlord. If they weren't doing that, the landlord now has all this extra stuff they have to do to, make sure policies are staying active. And it's a headache, and they have to track it, and that kind of sucks. And if you're a landlord and you're going to a property management company saying, I don't want to deal with this, it's, kind of like they've already said they're ready to pay, right? They're ready to pay more. They're gladly going to put up the admin fees. So I think a lot of the listeners are thinking like, yeah, that first one Scott just talked about, that's like the key path, because you're providing all this extra administrative services, and you should charge for it, right? So it sounds like you're typically seeing for that first path that a property manager will charge anywhere between like $3 to $5 as administration fees for managing the insurance program for the properties. Is that close, 3 to 5? Is that typically what you're seeing?
Usually it's around $5 a door per month.
$5
that they charge, that they would just put, add on to their management fees on the administrative for managing the insurance billing. And
so I think like some folks might be a little bit kind of intimidated, like, oh, do I really want to have to administer this new thing? Like, $5 per unit per month. Like if you're managing 1,000 units, it's a lot of money. You're talking, $5,000 in new revenues every year. But when it comes to the actual work, I mean, do I have to hire a whole new person just to administer this now? Like, what does that look like for the management company?
No, extremely simple. You just mark who's on the insurance policy that's being we have an online administration system where it pulls a report on a monthly basis. We break it out by insured, and it tells you exactly what their monthly premiums are. It handles if it's paid by a mortgagee, and a lot of that will be handled by the broker partner, whether it's their broker that they're using, or if it's a referred broker that's in. We would work with them on their system. Most of our brokers are currently on it, and we're actually have a 90% retention rate of customers using it. But they can actually go in online and update properties, add, remove properties. So the property manager, when they get the new, say, hey, Mr. Landlord, I just bought a new property, or Mr. Property Manager, I just bought a new property. I need to add it to my services. They say, okay. They ping the broker with the address. The broker types the address into our system. It automatically calculates the rate, and there's actually a built-in valuation system. And the policy is designed to meet all of the major lender requirements. So when they put in their lender as additional insured, or it automatically sends out the certificates. It takes a lot of that headache and burden away. So the landowner is not only going to not have to deal with managing the certificate, sending it out to their lender, figuring out if it's going to be paid mortgagee, it can be paid monthly or annually. The broker will be able to pull a report, or the property manager, if they really want to get in there and use and charge more per door and really get in and use the system can be used by the property manager. And then there's a built-in valuation calculator per property. And I'll back up for a second. The way we work as SES as underwriters is we're not underwriting each individual property. When we look at a property manager portfolio, what we're looking at, and as we said before, is we're looking at the investor profile. What's the property manager profile? What are their best practices? What's their geographic footprint? And so we can take a property manager that says, okay, I work in one state. Okay, we'll give you your rates in one state. So anytime someone comes to you as a new customer, you can actually key in their address into that system, and you can say, hey, if you want me to manage your insurance, this is what your insurance costs would be. Within as fast as you can type an address into the system, you could offer a new prospective landlord their insurance quote.
That's awesome.
And so the other benefit to it is that that's your insurance program. So that's exclusive to you as a property manager, as a Latchel client. If they want to leave the property manager, they would have to go get new insurance. So it helps with client retention, but you're able to really pick as a property manager, to go back to the revenue point, is the level of service that you want to, how much hands-on you want to be, is how much revenue you want to be able to drive from the customer as far as the billing aspects, if you want to get into the administration system. Does that answer your question a little more?
Yeah, that does. And I can see why folks might choose like that second method that's more hands-off. Although I think anyone listening is of the mindset of full value chain, create as much revenue opportunity as possible. So I think most of them will choose that first path. And the fact that it creates like that client retention is huge.
And I agree with you on that. I think that we're seeing, especially to be versatile in the marketplace, between the small property manager that's got a small staff, where they say, I don't want to take on that bandwidth, but I do want to drive some additional, and I like to call it bottom line income, because you're not really doing anything. It's money in for implementing the program. Or if you're a medium to larger size property manager that has someone that can spend 20 minutes every month to pull the report, then you can start to charge more. So I think that being able to be versatile and slide on that scale, and our systems being able to handle that on our integration side is very beneficial as far as the revenue standpoint.
Yeah, I mean, I think like if I was listening, if I'm a listener listening to this at this point, I'm probably thinking this almost sounds too good to be true, that you can offer this great service, create more retention, kind of customize unique solutions, and make money from it, and have it all almost be like turnkey. But I think the hitch here that most listeners will be thinking is, yeah, this all sounds great, but actually, how many clients, how many landlords am I going to be able to get to switch to this? So if they already have some type of insurance, is it really going to be that easy for me to get them to move to the program I spin up with SES? What do you guys think about that? I mean, like, what does the landlord, is there a meaningful benefit they get switching? Is it easy to promote this out to, your clients if you're a property manager? And is there a certain kind of conversion rate you guys would expect a property manager to have?
Yeah, absolutely. In all of these elements that you bring in, and I love that we bring up the challenges that come into mind, because I think that's what the listeners are sitting there going, okay, this sounds great, but, and then there's 3-4, different challenges that are coming up, and you're bringing up some great points. So to hit it straight away, the property let's look at it from the landlord's aspect. Okay, for a second, let's just sit in their shoes. we have built out the whole process. It's plug and play, and it is customizable for them to, tailored fit to them. It's like, here's how it fits you, and it fits around you like a glove. But let's sit in the landlord's shoes for a second. You get an email, and that's the tactic. We could either do it through a messaging whatever their preferred channel of communication is with their landlord. Oftentimes it would be an email. We have a custom template, essentially, that is customizable, that is specific to the landlord. So like I said, we're sitting in the landlord's shoes. You get that email at 10 a.m. on a Monday. It says, hey, here's this new program. It's great and wonderful. Here's the indication and the pricing. And let's just say it does not beat the cost or the price that I have on my properties right now, for whatever reason. Well, that's pretty cool. I'm happy. It's not someone's going to shove this down their throat thing. It's, hey, we've got this. It's here for you. We're willing to take it. And as a landlord, from the property manager, you're not going to lose on the offer. Hey, here it is. Great. I got better and I don't like it. Thanks for doing that, though. That's pretty cool. You've already gained value by simply putting the program in front of them. We, from a penetration and some of the other aspects that you said from the other questions of it, what we have seen historically is we would get an initial onboarding of about 15% trickling on, and we'd get up to about 40% of the portfolio in most cases. Now, mind you, we are only going into our second year of rolling this out with property managers and going in deeper. And that's why this sounds too good to be true, because we have skinned our knees several times, fallen down on stuff and did not realize that. And now we've got that solved, and now we've got that fixed. And now that's why we came into a more broader reach that we're doing here and talking about it. So those are the elements of how the penetration would work. The other thing I wanted to make a point is it's very easy, because the landlord, you know what, my policy doesn't expire till March of next year. Let's just say they get the email today, right? Great, not a worry, because what we built out is something that no one else has, and that's, technically speaking, a 2-year policy. So let's say you start the property management, it's called a master policy. I don't want to get too far in the weeds because we can start losing people quick. But what I want to understand is that if you opted in, Ethan, you opted in day one, Brett decides, hey, you know what? It's day 360 of this offering. I want to opt in. You both get a 1-year policy. So you're not going to be in the situation where I opted in and now I have to go through some sort of renewal or whatever it is. So it allows the landlords to opt in at their convenience. They can cancel and move immediately. And they say, hey, cancel all this. The cost savings is dramatic. We've seen that. Push it all in there. Or they say, you know what? Let's just fold them in as these policies, because most of the time it is a one-off policies with these properties. They're individual, like as if it was their own home, but now it's all centralized. The other aspect is landlord says, hey, I want to buy, I'm going to buy 2 more properties right now. Well, that system instantly can get you an evidence of insurance. Now, you talk about being able to move fast in a market that is requiring lightning speed. You instantly, I mean, within a matter of a minute or two, can have that property evidence of insurance, and you're talking about getting funding, getting that done. So all thanks to who? Your property manager. Now, where's that property going to end up? It's going to end up in the property manager's portfolio to go. So now you're looking from a property manager. You might have properties that are with your landlords that are not in your portfolio. Now you're going to be able to get organic growth from existing clientele, because I guarantee you, there's landlords that go, yeah, I got 4 properties with John Property Management, and I've got another 2 over here with Tim Property Management. Just give an arbitrary example. Man, John came with me with this opportunity. I'm just going to move them all with John. And now you just got yourself, instead of having to go win a new landlord, you got organic growth out of your existing clientele and we're able to grow your book there while making a marketing revenue on each policy.
Yeah. So if I kind of backtrack here, it sounds like right off the bat, typically you're going to get like a 15% conversion, just immediate pop in revenue across 15% of those properties, because you did a little bit of marketing and you immediately got people to switch. Then over the course of different policies expiring, properties coming on, new clients, that's going to roll up to 40%. Maybe you get up to 50%. And it sounds like that's sort of ends up being a steady state, except that there's this viral growth, organic growth component that as all those people that have opted in either purchase more homes or they have maybe other homes on their books that you're not managing, the rates are so good, they move those over too. They all come on the same policy, and you're now making more money even on homes that you might not be managing. Is that right?
Well, you weren't previously managing. You have to be managing them to move to be able to have that insurable interest. So that's what I'm saying is that if you have a landlord that has two that are outside the portfolio, they say, hey,
they bring them on.
Can I get my other two insured? Yeah, exactly. So you can imagine you get that phone call and go, hey, I have these two other properties, and property manager is going, I didn't know you had two more properties. Yeah, can I get these covered as well? They have to be under my book. So it gives you the property manager that leverage point to be able to command more business, to say, yeah, absolutely, you could take advantage of this program. But it's at the end of the day, it's my program as the property manager. It is my program, which is huge.
It becomes like a lead gen opportunity in some ways because the rates are so good, the product's so good, they look to get on it, and then you find out, oh, there's actually these other units that maybe you're not managing. No, that's really interesting.
Yeah. It was something that I got to be honest. It was an aha moment that we got as feedback and went, whoa, wait a second. It was like, this is great. I actually was able to grow one of my landlords, the book of business that I have with them. I was able to grow that business, and we went, huh. Okay, didn't see that coming. That's pretty cool. That worked out that way. So, sometimes the opportunities, we don't always see them in front of us and can state them up front. And it was one of those back end, like that worked out pretty well. And it's something we definitely wanted to share.
Are there like interesting tactics you've seen property managers do to get beyond a 50% conversion, like as their policies from their current customers expire? Like, have you ever seen someone get to like a 90%?
So we've seen consistent growth with our property managers in the portfolio. I don't know if there's necessarily a silver bullet, because the one thing we want to continue to preserve is no one wants to be sold insurance, right? No one wants that feeling of being sold. The property manager is not interested and legally cannot sell insurance. But what has been beneficial is to roll this out and periodically, hey, don't forget, we do have this this program. So it's something that you have to kind of keep fresh in the minds of your landlords. And that's where you start to see that incremental growth that just steadily builds upon itself. And then as the renewals, and it just starts to continue to stack. So I would say that the consistency of messaging that, and your engagement, and just saying, and then when you bring on your new clientele, this is part of your owner benefits package. We have this, we have Latchel, we have, right down the line, we also have this master policy program in which you can plug and play your properties in, and this is how it looks. The nice part is that if they ever feel like there's a conversation that's too insurance driven, it's too technical, the coverage amounts, whatever it is, that's where the broker that we have plugged in, whether it's their own property broker, like we said, we're truly agnostic, or we have designated partners that we have that are on, kind of sitting in the bullpen, if you will, right? So we just plug and play. They know the systems, they know the conversations, and it allows the property manager to, again, not get their bandwidth eaten up and say, hey, if you want to discuss this program in depth, these are the individuals to speak to. And that covers them from a legal and compliance perspective, which I think is important. And I don't think we really quite hit on, but we've cleared them of all of those risks and potential issues. And meanwhile, we also say, look, that conversation can get very long. You don't have time for that, Mr. Property Manager or Mrs. Property Manager. That's why you transfer that conversation off and allow that to be facilitated.
So it's completely turnkey. I mean, as a property manager, you're not exposing yourself to have to deal with all this questions and all kinds of things with the insurance ins and outs. It's really about offering a better product at a better price and being able to create opportunity with an administration fee, because you've got access to all the properties. You can directly plug them in through some automated technology solutions, and boom, you now have this crazy high value program. I love the thought of baking it in as an owner benefit. I mean, already, like, you're going to get a ton of stuff with, property manager that's using products like Latchel and enhancing the way that property is managed for the owner. But then to be able to have this benefit of, hey, you switch to me, you're going to get better insurance rates. I manage everything. It's all administered by me. You don't have to worry at all. I love that. It seems like in terms of the marketing too, I'd imagine, and tell me if I'm wrong here, that because the property manager knows when maybe other policies are expiring, they can come in at a good time and say, hey, your policy's expiring. Let's move you to, my company's policy where you're going to get better rates, better coverage. Do you see that often where property managers just automate kind of some marketing when the pre-existing policy is going to expire to get them moved over?
Absolutely. There's actually two entry points on that one. Yes, 100%. If a property manager is properly tracking and making sure that they're listed on evidence of insurance, and then they'll know the expiration date, so they can come in and say, hey, we have this offering, it's going to be expired if you'd like, and you don't want to go through or deal with the renewal because you don't know what's happening on the other end. I think from just a quick jump back in the industry of insurance, the market is hardening, and what that means is prices are going up all over the place. And I know everyone wants to rip their hair out when you hear that, because you're like, oh, inflation, let me guess. It's like, it's insanity, right? But at the end of the day, what is driving the increase in pricing out there in our world for insurance is all the increased cat activity, which is the catastrophic activity, the storms and the hurricanes and the this and the that and all that kind of things. So all of that from a much larger perspective is saying, hey, we've got to drive the prices up because we're having a lot more claims. So what could happen to the individual investor is their property insurance just got through the roof. They may not think there is another option. They may have forgotten about it. So that's where we say that timeliness and staying fresh with the client is ideal right there, and being able to put that in front of them. Again, just going, it's here for you if you want it. And I kind of, it's something that just kind of popped in my head. It's like Costco. You go to Costco because you can get great deals and all that kind of stuff. And then it's like, hey, we sell gas too. You never initially thought, well, I want to go get gasoline at Costco. It's like, no, I need my lifetime supply of toilet paper and, the giant pack of burgers. But then you're going on the way out, you're like, well, that price on gas is pretty good. I think I'm going to I think I'm going to go fill up real quick. I kind of feel like there's a little bit of that synergistic element there. It's not like they're saying you cannot shop here unless you go get our gas, and that's kind of the same thing with the insurance. It's like, it's pretty dang good, and it's tailored right to it. You can jump right into it. The other part of it, though, going back to the way you can where landlords can opt in, is if you're trying to track the certificates, and property managers, I think, really struggle with this. And let's just say that I don't know, you're struggling. I don't know where my certs are. I don't know how to get you added. Some carriers will not allow it because they're on the wrong type of policy. I'll keep it very, very generic there, but there's a lot of nuances there, but they are on the wrong type. And so the carrier goes, no, we're not adding your property managers to it because that's just not allowed in our, in our policy. Well, you can turn around and say, look, I've got to be on this policy. And it's not because you're being, over the top or like that. It's to protect you, the property manager. Flip all the liability out.
If you're not on it, then it could end and you have no idea. And now your client is completely exposed.
As you are. The landlord. It's not there saying you would say, hey.
As the property manager could be too. Yeah, I guess so.
Yeah. And so you go, here's the program.
And just really quick, I'll let you, sorry, I just interject really quick. I'll let you get back to it, Scott. But, as a property manager, if you have a maintenance guy that's out on site and he doesn't realize the tenant's home and there's a liability claim and you didn't have an updated certificate. That can be a nightmare for a property manager. So back to what Scott's going towards is with this policy, the property manager is listed on every property in that group as an additional insured or as an insured on that policy.
Yeah, that's awesome. That makes it way easier for them. They don't have to worry. They don't have the stress of having to track all these certificates separately, dealing with outside insurance.
And you're reducing your liability.
So we're jumping like all over the place, but
sorry.
Well, I have to apologize because actually for all the listeners, Brett and Scott basically thought I was going to start asking them about how these policies work at the end of this show. And I basically jumped in right at the beginning on like how this stuff actually works. Mainly because I think like this is like for all the folks listening, they're like, oh, we want the juice. Give us the juice now. So I hope we satisfied your thirst for all the listeners. I think like I'm going to kind of backtrack a bit because there was a question I told you before the show that I was going to ask that I haven't asked yet, but I think it's relevant to something our listeners are probably thinking, which is, hey, if I'm creating revenue with administration fees, it seems highly unlikely, potentially, that I'm going to be able to get a cheaper price for my clients. How is it possible that I can create admin fees and still have better prices and better products for them? And this is where I think like we should connect a bit on why the Latchel SES partnership is interesting. Can you guys talk a little bit about like why you partner with companies like Latchel and what that partnership actually enables for the property managers that are using both of the services?
Yeah, absolutely. So, let's really drive that home. So, as an underwriter, we're looking at we're putting together a portfolio for a property manager, right? They have the insurance term is care, custody, and control of that property. And so if I'm an insurance company, I need to make sure that if I have to set a premium to where I am bringing in enough money over time to where if something happens to that property, I am either level or I didn't lose money on it. And with the emergence of prop techs and specifically Latchel, and we've been watching this in the property maintenance side. We've looked at other companies. We've looked at different other solutions that protect properties, but Latchel is a key differentiator in the emergency side of things because stuff happens to properties. Real life happens. Little things get damaged. You don't really use your insurance for that. You use your insurance for a catastrophic scenario, right? When something is going to damage the property to where the tenant's going to have to move out. It's going to be a headache. You're going to have abatement work. There could be mold if water has been sitting there too long, and then that's a nightmare. And you've got and now you're just losing revenue on that unit, right? And you're still paying your property manager, and you're still paying for for the mortgage on the property. I mean, you're just out cash, and cash flow is king for these guys. And the Latchel's emergency response technology and our integration ability into Latchel can notify the landlord immediately that, hey, there has been an emergency at your property. Do you want to file the insurance claim? Yes or no? And in that way, we can have a claims adjuster out there significantly faster. And people are saying, okay, why is the claims adjuster important? The claims adjuster has to get there first before we can start working on repairing the property. So if we can get to them and shorten that window time, there's less chance of mold, there's less chance of damage to the actual structure of the building. It's an exponential difference in what could possibly go wrong when there's an emergency event that could cause structural damage to a property. And that is why we chose Latchel as a key partner in putting together this program. And property managers that use Latchel will see up to a 20% discount on their overall insurance rate. And so when we're talking about the landlord insurance and the value of the partnership is not just purchasing convenience. This isn't just for them to come in and say, hey, I can get insurance cheaper. This is saying, hey, we have partnered with a company that will helps protect your property. And I'm saying that as the property manager. So Mr. Property is is partnered with Latchel, a company that will help protect your property. And if hopefully it doesn't, something terrible happens, it's going to get fixed faster than it would normally in the open market. We as an insurance underwriter see huge value in that. And because of that, we're able to offer up to a 20% discount for Latchel for property management policies using Latchel customers. Sorry, my mouth is getting dry. That is way more significant than the $5 that they're going to charge per door. Does that answer your question?
That was a beautiful answer to my question, and I love the flattery of Latchel, the efficacy of our service. Thank you for that. I wish I asked that question right up front, even though people would have no context on the answer. So I think we had to go through the journey to get there, but that was awesome. And I think you did a great job kind of capturing why it's good for the management, because they're now able to still offer services that are going to be cheaper. The product's going to be better. And you can almost kind of see it as sort of a somewhat arbitrage opportunity that the property manager has to create administration fees, but still have a product that's going to be more affordable to the landlord than they would have otherwise. It's like you're talking about both parties winning.
I see it as a win-win-win. I mean, what's a win-win-win-win? It's a win for the property manager. It's a win for the landlord. It's a win for Latchel. It's a win for us as the underwriter and carrier, because we're insuring properties that we know are well protected. And in a world where catastrophic events are happening more and more, as Scott had mentioned, property rates are not just going up because of the cost of materials. It's unfortunate, but there are more natural disasters, and their insurance companies have to bring in more money than they put out. Otherwise, they go out of business. We've seen it with companies with the California fires, small insurance carriers that have just gone completely belly up, and people are left with their hat in their hand. And it's so, how can we mitigate these rising costs to landlords it's tough to get properties right now. You want to go out and you've got cash and you want to be able to be swift in the market. We can issue, as Scott had mentioned before, we can issue the certificate immediately on these group policies, so we can speed up lender funding. You're getting reduced premium. You're part of a group pool now. So now if you do have a claim on your policy, your rates aren't going to skyrocket. It's leveled out by the pool of the insurance property manager and the other properties that are on the profile. So it's really taking a lot of that burden if something terrible happens off your plate.
So I'm just like have this burning curiosity because Scott, you mentioned this, Brett, you've now mentioned this about rising costs, more natural disasters impacting the pricing of insurance. So you can just answer this as a yes or no, or an I don't know. Is global warming good for insurance companies like SES or not good?
Oh, absolutely not. It is not good. I'll just give you my joke that I always kind of razz myself is that insurance is the only business in the entire world of all industries that sells a service that doesn't want you to use it. Think about that, right? Because if you use insurance, it's a claim, which means money's paid out. Obviously, that's the point and the intent of insurance. But the ideal scenario for every carrier is to go, we wrote all these policies and nobody had a claim. Awesome. That is the profit margin of a lifetime. So global warming and all of that is just completely compounded and made things very, very difficult. And I think kind of tying back to like that's not just a complimentary dialogue about Latchel just because we're on your podcast. We literally went to the carrier and spent time and sat down and put into algorithms and statistically modeled the benefits of how this works. So it's truly it's statistically proven of what your service is capable of doing because of the time that's cut down and all these things that people that know math better than I could probably ever realize were able to really identify. So that's where that cost is. And I think that the rising cost, going back to global warming, is actually now having to be bared by all parties, by all of us. Anyone that has homeowners insurance to insuring your rental property, you're bearing the cost of all of these elements. But now if you can step inside a safe little bubble and say, hey, we're not going to get affected by that nearly as much, you really get I think a positive turn and that value add that we're talking about that changes the dynamic of how we look at it and how our carrier are approaching it and how we're approaching it. And subsequently, even retail insurance brokers can approach it with their property managers.
I'll say I didn't ask the question to talk about global warming, but part of the reason I asked was I got this sense that change globally isn't good for anybody. It's not making insurance companies more profitable. It's obviously not good for homeowners that are dealing with more fires, more flooding, and things like that. But I wanted to ask it because I think folks, when they see these rising prices in the back of their head, and this is my default, I'm always like, oh, there's the big insurance company trying to just make more money. But really, that's not what's happening. It's everyone's kind of just trying to hit that baseline and adjust based off like where the world is moving.
Yeah, and really the joke in insurance is if you go to school for mathematics, you can you can work for an insurance company or you can be a math professor. So they run on all algorithms, and there's an insurance commissioner in every state that only allows you to raise rates by so much. So they have to petition every year on why they need to have the rate where it is. So it's not, insurance companies aren't allowed to just jack rates. They actually have to have it approved. And unfortunately, they're not currently not able to raise rates fast enough to recoup for some of these large losses. So it's unfortunate all around.
So we're coming up on time here. I have two questions left. One is sort of an impromptu. It's the one thing we haven't talked about, but I think the remaining thing that might make a management company say, hey, I'm going to push this off. And it's how easy is it and how fast can a property manager spin up this service and get things going with you guys? Can you, like, maybe 1 minute, just race through that?
Real quick. 4 easy steps. Basically, it's just one quick data collection of an Excel spreadsheet of the list of the property addresses with the owners, entities attached to them, whether it's an individual or an LLC. If they send over their packet of their property management agreement, their lease agreement, their tenant screening, just their basic, any new customer packet on the resident side and the landlord side. We take it out to the marketplace. It's usually a 3 to 5 day turnaround before we have the program ready to go. Everything is all set up as far as the marketing. We work with them. Everything's pre-done. They can tailor as much as they like to send out through their system. We find better conversion when the marketing comes through their email versus ours. And then all communication is then directed to the broker partner for when there's inquiries. So pretty much the property manager just has to give us a little bit of information, and we have a canned email merge that goes out that they click send.
So get an Excel spreadsheet over, take a break for 3 to 5 days, have a couple beers, connect back with you guys, get the email template for the email marketing set up, click the send, boom, you're ready to go. Yeah,
owner opts in via a one click, or they ring the broker party for questions they may have, and they're good to go. And then certificates go out, and the broker the servicing broker will help them cancel their old policy. But as far as from the property manager's seat, yeah, they can kick back and have a beer.
All right. Well, for any listeners, especially if you're using Latchel and looking at ways to create more revenue, it sounds like this all starts with a half-hour quick meeting with Brett and Scott. Guys, let's take it home. Tell people how to get in touch with you.
Absolutely. So you can reach us at partners@SES SES-INS.com, or you can reach us on our phone line at 657-261-2470. And then that reaches both Scott and myself.
Beautiful. And if anyone's a Latchel customer, or even if you're not a customer and you want help getting back in touch with Brett and Scott, just hit us up. All right, guys, thank you so much. And for all the listeners, thank you for tuning in. It was a pleasure. If you're interested in more topics on property management growth and scalability, head over to Latchel.com and subscribe to our newsletter.